Hello and welcome to Stock Market Fever. In this video we're going to analyze and evaluate Microsoft stock to see where it has been, what it is doing currently, and what industry analysts forecast for its future. Additionally, you'll absolutely want to stay to the end to see how we at Stock Market Fever wrap it all up and provide you with our forecast for Microsoft. As a leading provider of computing services, computers, and ancillary tech products and services, Microsoft stock has been on a tear over the last 3 years. Company revenues exceeded $125 billion in 2019, and with the advent of COVID and society's increasing movement to do more of everything online, Microsoft's revenues grew to over $168 billion in 2021. And with that increased revenue came increased profits. Microsoft earned $5.08 per share in 2019, and that grew to $5.76 in 2020, before soaring to over $8 per share in 2021. This explosive growth, we believe, has been due to the overall growth of our tech economy, plus an infusion of massive cash by the government into the hands of consumers by way of stimulus checks. And with that massive growth, shareholders have been handsomely rewarded. If you had purchased Microsoft stock 3 years ago, you would have seen your shares go up from $119 to its closing price today, June 2nd, of $273 for an over a 150% ROI. But it hasn't been an easy straight climb up. In fact, after the stock peaked at $3.49 per share back in November, the stock took a deep, steep dive south, hurling down to earth at about $100 per share as the overall market, and particularly tech stocks, have been hard hit in this bearish market. But even so, if you had purchased Microsoft 1 year ago, you would still be up about $27 per share for about an 11% return. But if you purchased Microsoft at the beginning of this year, you'd be down about $62 per share for a loss of 18%. Ouch. So what are analysts forecasting for Microsoft's future? We'll be glad to tell you in a moment, but if you like this video and would like to see more like this, please click the like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. Thank you very much. Okay, here it is. Out of 34 securities analysts covering Microsoft, 27 rate the company as either a buy or strong buy, with 6 as a hold and 1 sell, for an overall bullish buy sentiment. Their average 1-year target price is $360 per share, which is a healthy $86 per share price higher than its close on June 2nd. And what are individual analysts saying about Microsoft's buy rating? On April 27th, Cfra maintained their strong buy recommendation and raised its target price to $402, impressed with Microsoft scoring big gains in many sectors of their operations, noting strong fiscal year third quarter 22 results with year-over-year revenue growth of 18%, year-over-year continuing to benefit from Azure cloud growth, up 46% year-over-year, an ongoing cloud shift tailwind for Office 365 and Dynamics 365, and impressive year-over-year growth for both LinkedIn and Bing. And Morningstar equity was also bullish on Microsoft, but setting a much more conservative target of $352 when the shares were trading at $270. Morningstar's bullishness was tempered by existing and new headwinds such as inflation, a growing currency headwind, a change in licensing practices for on-premises transnational business, worsening supply chain conditions again, the Russian invasion of Ukraine. Morningstar's concern about a growing currency headwind, by the way, proved to be right on the mark, as on June 2nd, Microsoft announced that they were lowering their net income guidance for the fourth quarter of fiscal year 22 by 25 cents per share. And where does Stock Market Fever predict Microsoft shares are heading? We'll be glad to tell you we're glad to take a stand. We're very brave like that. But before we do, if you like this video and would like to see more like this, may we request that you please smash the like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. Thank you for helping our community grow. Okay, here it is, the moment you've been waiting for. While Stock Market Fever does not offer investment advice, we gladly offer our opinion. And in our opinion, we are bullish on Microsoft's future. We believe this company is hitting on all cylinders in different segments and are especially impressed with their growing and recurring revenue streams from their cloud offerings such as Microsoft Azure, Microsoft Dynamics 365, and Microsoft 365. Yet, we also temper our bullishness with the same headwinds noted by Morningstar. Inflation is not yet under control, and with the rising price of everything coming less discretionary spending by consumers and businesses. Thus, we at Stock Market Fever, while we're very much bullish on Microsoft, set our 6-month target at 310 and 1-year target at 350. But what do you think? Where do you think Microsoft is heading in the short run and long run? Would you recommend buying, selling, or holding? Please leave your thoughts in comments below, as we'd love to hear from you. And please be sure to like and subscribe to Stock Market Fever for future actionable stock market news, analysis, and alerts.